Yeah, well, is it a reality check or a response to reality of where prices are? So, most of those price targets are still pretty healthy gains from where shares are right now. I think the analysts just, they have to realize, okay, my targets prior to today were too high, and I've got to produce some more reasonable assumption of where they can end up. So, Apple from where it is now to 174, good 20% plus gain. What was the other one? NXP, I own that, obviously. That would be a 30% gain to that target right now. I think the bigger issue that I have in tech, or the bigger question I have, is what's really going on at the fundamental level. And I would point to the semiconductors. I know we want to cover this later, so I won't go too deep, Scott, but you've got disparate views from Micron, which gave very ugly guidance 2 weeks ago, and then last week you had Samsung Electronics being pretty rosy. So where does the real answer lie? And so for a stock picker like me, this week is important because you've got Taiwan Semi producing results on Thursday morning, and that will help answer the question. Now, that question, though, is in the short term. In the short term, of course, we're expecting earnings to slow down here, probably come in worse than expectations. The question being by how much. For me, Taiwan Semi will help answer that question, but I also want to point out that long term, I look to 2023 and I see the estimates should stay intact because of supply chain onshoring and infrastructure spending. I'm going to stay consistent on that topic. So this malaise, which I think Joe referred to, maybe it was Liz, it will stop when the Fed pivots. That's probably a couple of months away.
Yeah, but see, I have a problem with that view. I just don't. And as Joe was saying, you've got this economic slowdown underway. I'm thinking to myself, how could we have so diametrically opposed views on where we are in the economy? Joe says we've got this slowdown underway. The data suggests that Joe is correct in that view. And then there's you, who argues this completely other point, who wants to buy cyclical stocks over growth. And I just don't get it. As if the Fed's going to pivot, as you suggest, and all of a sudden the economy's just going to roar ahead. They're going to pivot because if they pivot at all,
well, Scott,
if they're going to pivot at all, it's because the economy has forced their hand by being too weak.
Scott, you're making your point, so let me answer. I understand, but I'm reporting the facts here, okay? The supply chain onshoring is very real. There are increasing reports of more factories being announced, more mines being dug here in the U.S. And by the way, in Europe as well.
I still don't buy this argument. You are suggesting that the announcements of new factories and supply chains automatically put supply chain onshoring in play now. No.
Scott, I'm gonna continue to answer your question.
Please,
is pointed. I'm gonna continue to answer. What I'm trying to tell you is that for all the negative news, there is also positive news that is being ignored. And so you ask me, how can the cycle continue? I look at the labor report, and okay, I will admit that labor is a lagging indicator, but for goodness sakes, there isn't a hint of a crack in it. There just isn't. Whether it's the labor report itself or whether it's the jobless claims. And honestly, you actually want these to get a little worse to take the Fed's aggressiveness away. But the point that I'm trying to make here, Scott, is that we've been focused on the negative for all of the last 6 months. There are positives out there. You just have to wait for them to come through. The malaise will end when the Fed pivots. And for that, you're looking for inflation to come down. Look at where RBOB is. Look at where gasoline futures are. They're 20% off in a month. That matters.